Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with the United States dollar against the Swiss franc. The United States dollar against the Swiss franc is recovering after recent losses from the previous trading session. The pair is gaining strength as the US dollar is supported by rising energy prices and renewed concerns about inflation. This has reduced expectations for interest rate cuts by the Federal Reserve, providing additional support for the US dollar. At the same time, further gains in the United States dollar against the Swiss franc may remain limited as the Swiss franc is strengthening due to increased demand for safe haven assets. Swiss National Bank Vice President Antoine Martin confirmed that the central bank is ready to intervene if the Swiss franc strengthens excessively, which in case of intervention could support the United States dollar against the Swiss franc. Meanwhile, inflation in Switzerland remained at 0.1% in February for the third consecutive month, despite expectations for a decline. With inflation staying near the lower boundary of the Swiss National Bank's target range of 0 to 2%, policymakers remain cautious due to persistent risks of deflation. Next, let's move on to gold against the US dollar. The price of gold against the US dollar continues to rise for the second consecutive day as investors seek safety amid uncertainty in global markets. The precious metal is gaining attention as the US dollar weakens, making gold cheaper for foreign currency buyers and increasing overall demand. Meanwhile, the United States plans to introduce a temporary global tariff of 15% this week, replacing the previously imposed 10% rate. Treasury Secretary Scott Bessent stated that the tariff could return to previous levels within 5 months as new trade investigations move forward. However, the upside potential for gold may be limited. Rising oil and gas prices are renewing concerns about inflation, prompting traders to delay expectations for interest rate cuts by the Federal Reserve. At the same time, the yield on the U.S. 10-year Treasury bond has risen for the fourth consecutive day, reaching around 4.11%, as markets evaluate fresh economic data and changes in tariff policy. So, these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.